Happy Wednesday, happy Wednesday. Listen, I try to stay off, want to be able to share so much. So, welcome again, happy Wednesday. It is Wednesday afternoon at 12:30, depending on what time of depending on where you at in the world. Oh, excuse me for that. Depending on where you are in the world. But right now, I am in an amazing place with birds chirping. Um, let's just give God, man, His grace right now. Listen to this. How amazing is that? So, the housing market. The housing market, the housing market, the housing market is the big topic of discussion right now. You know what's funny is that we are literally 16 years away from the last housing bubble or the last housing crash that created a great recession here in the United States. 16 years. So 2008 was when it started, midway of 2008, and it came to a head in 2009. And right now, we're in March of 2000 and we're in March of 2025, and here we are again talking about the same thing. But what I find funny is here's what I find funny about this whole situation, right? Who's to blame, right? And so here's what I mean about that. So the big news that come out today is that the housing market is strong except for FHA loans, right? So what is FHA loans? The Federal Housing Administration loans. That's the what seemed to be crashing the market this time around, right? And so the talks are, hey, the market is struggling because people who only have to put down 3% of the actual house loan total, they can't afford to pay the loan, right? And so they say that normally the default rate of those loans are around 9 to 11%, but right now is around 13.2% of people who got FHA loans. Again, those are the people who have the loans that you only had to put down 3%. They say that those homes are at default. Here's what I find interesting about it, right? And I'm in the neighborhood because I just want to be able to really show y'all, what's getting affected and how it's affected. Here's the interesting thing about it. They say that, well, the news is that Biden, under the Biden administration, that a lot of the homes that was out there that was under default, they wasn't able to go under default, in default, or be go into foreclosure because Biden was providing stipends and assistance with allowing homeowners to either forego their payment and put it on the back end of the loan, or they had a few months to be able to catch up on the loan, and that was what was creating the problem, right? I'm seeing Mr. Cash Yap. What's going on, boss? Air Force Key Warrior. Not sure what that means exactly, but glad you're here. Glad you're here. I'm good. How are you, brother? And so what's really going on is it looks like they saying that the previous administration here in the U.S. before President Trump took over, was hiding the delinquent loans and hiding from enforcing loans to not go into foreclosure, so it doesn't tarnish his record or tarnish his his reputation. I am in Miami and I am from Miami, so from Miami, Florida. Um, what I find interesting about that is this, right? Let's look at FHA loans right quick. So, yes, FHA loans state that homeowners only have to put down 3% of of the loan total. So if you have $100,000 loan, then you need to put down $3,000. If you have a $200,000 loan, you need to put down $6,000. If you have a $300,000 loan, you need to put down $9,000. $400,000 loan, you need to put down $12,000, etc., etc., etc. Right? And so what I think is interesting about that is that most people who qualify for the FHA loans and only put it down to 3%, they have to deal with what you call PMI, which is prime mortgage insurance, which means that until you can actually pay the 20%, or you can be able to pay up the 20% of the total loan cost, you have to pay an extra amount of insurance on that home, which will cause your monthly total to be higher. Right? And so I will repeat that. Even though you only have to put down 3% of the loan total, in those situations, you have an extra cost on your monthly mortgage total because something called PMI, which is mandated by FHA, that saying that you have to pay extra until you pay down 20% of the total loan cost. So again, if you owe $100,000 of the loan, home is worth $100,000, until you pay down at least $20,000, which is represent 20%, then you have the extra mortgage insurance, right? But let's look at the current climate of what the housing market is. Homes are at an all-time high ever since 2021. How many people are complaining because their taxes, their homeowners' taxes, have went sky high? Me included, I was a victim of having a mortgage that was $2,021 and it skyrocketed all the way to $2,600. $2,600. So imagine expecting your mortgage to be a certain price, and now you have an extra $600 tacked onto that. That's a lot of money. That's a whole lot of money. In today's climate, that's an extra car note. That's an extra bill that you have to pay, right? And so not only taxes, but insurance have also went up. Insurance rates, homeowners insurance rates. So especially if you're in a state like Florida or New York or California, Texas, especially like California, then you're in a situation whereas because of all the natural disasters that go on with hurricanes and everything that happens, right? They give the insurance company profitable cause to raise your insurance. So not only are those homeowners that say, hey, look, I'm under limited income already, right? So not only are they having to pay prime mortgage insurance, PMI, but now their mortgage have been raised because of taxes. Their mortgage have been raised because of insurance have went high. That's not even factoring in the cost of the inflation that been going on, right? And so what I mean about that is, okay, you bought a house. Your mom, dad, you got 2 kids in the household, right? Standard American family, let's say that, right? And you're used to paying a certain amount, and things have already went up. But now you're paying what, $11-12 for a price of eggs, right? And I let the car go by, right? But you're already paying $11. Now you're paying $11 for the cost of eggs. You're paying $4 for the cost of a loaf of bread. And for those who are not from the U.S. that's tuned in, think about how ridiculous that is. Think about what you're paying at the grocery store versus what those prices I just said just now. I think the biggest shell shock for me is because, I travel around and I go back and forth to different countries. The biggest shell shock to me was when I actually went into the grocery store and I seen a half of a loaf of bread for $3. I couldn't believe that. That was the most ridiculous thing ever. What am I going to do with a half a loaf of bread? What, eat 3 peanut butter and jelly sandwiches because that's all I can afford, and then it's gone. Now I got to go back to the store to be able to buy more bread or buy more goods. And so I think about that, and I say this, right? Anytime that we ever go into a bubble, a recession, a decline in any type of market, especially the housing market, I know that it's very easy for the pundits to be able to blame the everyday American, the everyday person, right? Oh, well, this person couldn't afford the mortgage in the first place, so why did they even get afforded that house? Why are they a home buyer? Well, I mean, have you seen rental prices lately? Have you seen rental prices lately? Seriously. I remember about a month ago, I went to a old apartment building that I lived at probably about 6 years ago. For a 3 bedroom apartment, we was paying $2,000 for a 3 bedroom apartment, and it was pretty nice. I'm not even gonna lie. It had all the luxury amenities, big waterfall, and the lobby had an area where kids can do their homework once they get out of school, because normally school ends before parents get out of school. I mean, get off of work. It had all these amenities. So I went by there just for poops and giggles, right? I went by there about a month ago for that same apartment, the same one. It was $2,600. That is what? A 30% increase. And guess what? It was looking raggedy now. I mean, I'm talking about the outside walls wasn't painted. They got rid of all the after school programs. All of the things was all of the amenities that they had. They all but got rid of them. But hey, in the lobby they gave you a cookie and some lemonade if you wanted or tea if you wanted to tour the property, right? Which is the craziest thing. And so my point is like, okay, so you're telling people don't buy a house if you can't afford it, but the option is what? Renting for the rest of your life? All right. So let's go back there, right? So most people want to have something that they own, right? They own this property. We don't own the land, but we own this property that we have, right? If you want to get anything done, you have to if you want to be able to paint your house a different color, you got to get a permit that may take years for that to happen. If you want to get your driveway repaved, you got to get a permit for that. If you want to plant trees in your yard, you have to get a permit for that, or the approval for that, especially if you want a homeowners association. And oh my gosh, don't talk about the prices of homeowners association. Like literally some places are $1,000 a month, if not more, for homeowners association. So what I'm saying to you is, yes, people are going into the FHA programs. They are going into the first time home buyers programs. Yes, they're only putting 3% down of the total cost. But once you're factoring in the cost of houses, the houses in my old neighborhood in Central Florida, when I first was in that neighborhood in 2018, the average house in that neighborhood was $250,000, right? Now, the average house in that neighborhood, no lie, for that same type of build is around $475,000 right now. So I paused on that one because I want you to really factor that in, right? I told you what 3% of a $200,000 or the 2%, 3% of a $300,000 house is. But imagine having to get up the money from not paying for a $200,000 home now or $250,000 home now, but a $475,000 home. And so forever for my my calculator people, go ahead and tell me, what is 3% of $475,000? That's a lot of money. That's not factoring in the closing costs that come along with it. Just for a title company to have the ability to say, hey, we're going to file paperwork, and they're charging you an extra 3% or 4% on top of that. Right. And again, I've been to I just recently came from South Africa, and the system is totally different. So black people, if y'all thinking about going somewhere else, consider South Africa. Trust me, it ain't what y'all they tell you on TV. It's beautiful, absolutely beautiful place, right? But the point that I'm making is this, right? Most people that's in the country, most middle America, right? And I'm a strong believer that there is no middle class anymore. That's either you're rich or you're on the bridge of living under a bridge, because one missed payment or one missed paycheck will put you in the poorhouse. You will be you won't be able to recover from the bills that you owe, right? And so most people are saying, hey, I can barely afford to buy a house, but they buy it, right? They live out the American dream. They get the house that they want. They can be able to say, I own this. This is something that makes me feel good, right? So they get that American dream. They fulfill it. They do the things that they want to be able to do, but systematically, everything goes up on them. The price of goods, taxes, insurance, right? Homeowners association fees. But then when things all hit the fan and they can't afford it, because when you challenge people and say, hey, make a decision between paying your mortgage or putting your kids in daycare so you could continue to going to work, right? And if you've seen the price of daycare, I think some people are paying $200 to $300 a week for one child. So you telling people to either pay your mortgage or catch a bus to go to work. And if you're in certain areas, especially like South Florida, the metro system is pretty rough. That for a place that's 30 minutes away, it may take you 2 hours to get on the bus and go across town, right? You're telling people to make a decision between paying your mortgage or being able to feed your family and feed yourself so you can have enough strength to actually make it to that job, right? And so you asked me, what are we talking about? We're talking about the housing crash, or the mortgage that's going on, the housing market that's going on right now, saying that a lot of the first-time homebuyer homes are going into default because they wasn't able to actually afford it. So the point I'm making in this situation is like, yeah, people have the right to be able to own a home, to do the necessary things, the basic, American things, right? Own a house, own a car, provide your kids with a good education and a nice meal, right? People have the right to be able to do that. I think that's part of our American rights and our American duties, to be able to go and say, we're going to make this country a better country by contributing to it, by working, by making sure that we contribute to, small businesses and everything out here. But what happens when in your journey in doing that, then everything else goes up, and then they make it crash down. So here's my thought process, and it's just a theory on this, right? Just a theory on this. So let's rewind back about 2 or 3 years when it was a mass amount of homes, small time, first starter homes and 2 or 3 bedroom homes being bought up, right? A lot of those homes wasn't bought or purchased by individuals. That wasn't purchased by families. A lot of those homes was actually purchased by large institutions. And guess what those large institutions did? They put those homes for rent. And so let's rewind back to what, 10 minutes ago, about 10 minutes ago, when I say the price of rent has went to a sky high total. So what happens if just maybe the cost of taxes and insurance half went up in order to kind of push people into default? So when they go into default and prices are already at an all-time high, so now individuals can't buy it. Now the businesses and institutions can buy even more homes, so they can be able to put those homes for rent, which in turn will create a system of having only the uber rich or the uber successful or a certain class of people that can actually afford a home to be the ones that afford a home, and the others have to rent and always have to worry about escalated rental prices that goes up on a yearly basis. Because I could tell you this, for people who's out there renting, when was the last time that your rent actually stayed the same year over year? It always goes up. And so what if what I'm saying is correct? What if we're in an environment where, yeah, people are supposed to lose their homes, so institutions can buy them up, so we can be able to create a culture of renters. And it doesn't help that now we're talking about tariffs against a place like Canada that provides the lumber. It threatens to turn off the electricity and provides the steel that actually builds the homes in America. And so if the houses are already expensive and people can barely afford them now, and we're talking about tariffs against the actual provider of the materials to build the house, what happens when the houses become even more expensive? Maybe I'm crazy. Maybe I'm crazy. Maybe I'm tripping. So I'll leave it at that. I would say that maybe my mind is just playing tricks on me, right? Maybe that's not what's happening. But time will tell. Time will tell to say maybe this was part of an overall plan to be able to make sure that the wealth that people can actually accumulate by buying a home in their early 20s or their late 20s and keeping it until retirement into their 60s, and then selling it and creating wealth and putting that wealth into their to their bank account and then passing that wealth down to their kids. Maybe those days are coming to an end, right? Because we already know that home ownership has been the biggest wealth transfer ever in the United States. Y'all tell me y'all thoughts. Again, thank you for tuning in with Terrell Clayton Media. It been real, y'all. Bye.